Anton, good to have you with us. We're told that the Chinese banking regulator is requiring banks to raise rates on third mortgages and demand a bigger down payment. What are you hearing? Any truth in that?
Yeah, we've not heard that story so far, and I think the first point would be that the number of people who would be buying a third property is probably a very small sector of the market. And for that group who might look at further investment, they tend to be cash buyers rather than people who need to get access to mortgages.
Now, talking about mortgage defaults, are they on the rise? How bad do you expect the picture to be in the year ahead?
No, I don't think so. I mean, when we look at the overall market, about 35% of buyers are actually paying cash. Paying a one-time transaction. Then we look at the luxury sector, that tends to go up to 40 to 45%. So I think it's a very different picture to what we might see in some other markets around the world where, lending has created so many problems.
So we're talking about people with really, really deep pockets. But we had a guest yesterday, Andy Xie, who said that China's property market is set to burst. I mean, you disagree, obviously, but what could lead him to think that?
Well, I think it depends on your perspective. I mean, if you look at an open economy where, funds can transfer in and out easily and people can complete transactions easily, it's quite different. I mean, in China, the transaction cost, depending on when how long you would sell a property after purchase, the transaction cost can be between 5 and 7%. And I think given that most people are still quite optimistic on the medium and long-term outlook for the Chinese economy, in order to get a big correction in pricing, you need to get a lot of people selling. And we haven't seen that in the market this year, and we certainly didn't see it in a significant way in 2007 when we did have a big price correction, and in 2008 when we did have a price correction in China.
So if you want to play China's property market, what do? Buy now if you're expecting prices to rise later on?
Yeah, I mean, we would look at certain cities. I mean, I think when we looked at, say, 2007 in the second half of the year and 2008, we saw a price correction in Beijing of perhaps 15%. In Shanghai, that might have been nearer to 20 to 21%, and in South China, 35% even. So when we've seen, there's significant increases particularly in the second half of 2009, where, Beijing, we saw an 18% price increase in the luxury market. In Shanghai, we saw possibly up to a 23% increase. But these are, making recoveries off, previous poor performance. So when we look at inner city locations in Beijing and Shanghai and even in Guangzhou, there's really not that much land available left for development. It's getting harder and harder to relocate residences. So, we feel that you can quite safely invest in Beijing or Shanghai, and we'd expect that you get GDP, possibly GDP plus returns.
That's Tier 1 cities, the likes of Beijing and Shanghai. How about Tier 2 cities?
I think in the Tier 2, you really have to, you really need to know your market well. If you look at northern China, I mean, places like Shenyang and Dalian, they didn't see, significant price increase at all, despite the fact that they have similar GDPs. When you go towards the second-tier cities around Shanghai, cities in Zhejiang or Jiangsu province, I mean, we've seen some very, very big increases in pricing. Last year in Hangzhou, we probably saw price increases of between 35 and 38%. So perhaps in those locations where government is now releasing a lot of land supply back into the market, you might not look there. But locations such as Tianjin and possibly places like Dalian in the north that haven't seen quite the price growth that we've seen in the eastern part and in the south, we'd think you should consider.
Let's focus on the higher-end luxury condo market. That's what we've been talking about all morning here on our Eilers show. Beijing is the only city in China where non-resident foreigners can buy property. Will this rule be repealed, do you think? We saw in January 2009 the central government put a moratorium on banning non-resident foreigners coming back into the market. I think there's always a chance that the central government will look at foreign purchases and, try to send a message that they don't want to have speculation in the market. But when we look at Beijing figures in 2009, luxury property, probably only 2 to 3% of purchases would have been foreign, and out of that group, 80% would have been resident foreign. So the non-resident foreigner buying property in Beijing is certainly not the threat to the market that some may believe. Having said that, government often announces policy changes before Chinese New Year, so it wouldn't surprise us if they rescinded that ban. And in terms of interest going forward, do you see interest from foreign investors, foreign buyers?
Yeah, I mean,
We do see significant increase. I mean, there's an expectation now within, the domestic market, which provides, 85 to 90% of the buyers. The reason why they're looking at property again is not only for end use. They look at deposit interest rates are probably 1.85 to 2%. They look at reasonable increases in property. 5 to 10% is a normal expectation. So we see foreigners being attracted again, but it's getting more difficult for you to get direct access to the property market. Only Beijing is the only city that officially allows you to do so.
Anton, before we go to break, just one final question. The
Sure.
risk to investing, if you're already owning a property in China, what are the signs you should be looking out for to sell your property?
I think the key thing is that when we look at investment, I think we need to separate investment from speculation. Purchases that we would introduce property to, they're generally got a 5 to 7 year time frame. Would a market like China ever experience a significant correction? I think we saw the start of that in 2007 and 2008. But the risks now are quite limited. We do not think that the central government will significantly alter policy in 2010. It had too much impact on the overall economy last time, and we're still in a fairly mild recovery. It's not fully established yet.